US Treasury yields are down on hopes inflation is moderating. The yen got a bump on reports the Bank of Japan might raise its inflation outlook. Taiwan's CPI is lower than expected, and the Reserve Bank of New Zealand is expected to hold rates later today. That's coming up in our 5 Things in 5 Minutes. And then in our bonus deep dive interview, ANZ Economist Bansi Madhavani looks at what's at stake in South Korea's general election today and what it could mean for fiscal and monetary policy.
In some ways, this election is important because it's sort of a mid-cycle report card for the president and his party.
But first, in 5 and 5 with ANZ, US Treasury yields fell overnight on growing hopes that US CPI data tonight will show monetary policy is restraining inflation, says ANZ Head of G3 Economics Brian Martin. Yields were down 5 to 6 basis points at 4 a.m. Sydney-Melbourne time. Stocks just marginally weaker. The US dollar weakness, though, saw the Aussie up 0.25% at 66.20 US cents. And the Kiwi was up 0.4% at 60.52 US cents. In currency markets, the yen strengthened slightly against the dollar on a report that the Bank of Japan might increase its inflation forecasts. Meanwhile, gold trading up over 0.5% and just below a new record intraday high of $2,384 US an ounce. West Texas oil down 1.5% on hopes of a Middle East ceasefire, although it did moderate as talks failed to reach a conclusion. But Brian says the big move was those US Treasury yields.
Well, the market is again fully pricing a 25 basis point rate cut from the Fed in July. It's pricing between 2 and 3 rate cuts for the year as a whole, but that sentiment is very volatile and I think just really follows Fed guidance around and is subject to change depending on the certainty surrounding inflation at the moment.
Number 2, Taiwan's CPI inflation rose 2.14% in March, which was well below the 2.5% expected. ANZ economist Bansi Madhavani says all eyes are now on looming electricity price hikes.
So the central bank will certainly be relieved by the lower than expected CPI. More importantly, going forward, we're keeping an eye on the trend of inflation in coming months. As electricity fare hikes kick off from April, there could be some upside pressure on inflation in coming months.
Number 3, Australia's ANZ Roy Morgan consumer confidence dipped last week as inflation expectations rose for the 3rd week in a row. ANZ economist Maddie Dunk says that will be closely watched by the RBA. Meanwhile, March business confidence in Australia was stable, according to the NAB monthly survey. While there were signs some capacity pressures are easing, Maddie says it's a bumpy road.
So in the current release, we'd seen that labour costs fell, purchase costs fell, a lot of those pricing indicators all moderated, but that follows a month where they rose. So it just highlights that it's a bumpy path downwards and we need to see that continual easing to get more comfort.
Number 4, the Reserve Bank of New Zealand reviews its official cash rate later today. ANZ New Zealand Chief Economist Sharon Zollner says all expectations are for the rate to be held at 5.5%.
We don't see anything in the recent data to really challenge their assessment of how the economy is going and how inflation is looking, which is essentially that we're getting there. Questions remain around whether it's fast enough and how soon we're going to get there, but things are definitely going in the right direction, with the demand side of the economy struggling as the supply side of the economy, in particular labour supply, has really lifted courtesy of strong migration.
Number 5, feeding into the Reserve Bank's outlook will be the 14-point drop in yesterday's NZIER Business Confidence Survey. Sharon says that mirrors ANZ's own Business Outlook Survey and shows some easing in the supply side of the economy.
Firms are definitely finding it much easier to find labour. Labour is no longer a meaningful constraint on production for many firms, and that's a real contrast with the COVID period. So that'll give the Reserve Bank a bit more reassurance that the labour market is no longer inflationary.
Sharon Zollner there. Now, in today's bonus deep dive interview, ANZ economist Bansi Madhavani outlines the possible outcomes from South Korea's general election today and how they could affect fiscal and monetary policy.
Currently, the opposition party, which is the DPK, which is the Democratic Party of Korea, they hold majority in the National Assembly. So the President Yoon's party, People Power Party, the PPP, would be looking to secure majority in the assembly this time around.
And what would we see if the PPP does manage that majority? What would that mean for fiscal policy?
Yeah. Look, I think this election outcome is important from a very domestic policy focus standpoint. The market implications, though, could be limited. If we do see that the PPP-led majority comes up in the assembly, it would pave the way for the government to focus on important issues that are plaguing the economy, which is around high inflation, financial stability, because leverage levels are quite high, and in general, furthering the progress in areas of new technology and electric vehicles. But the DPK-led parliament would mean that president would struggle with building consensus and passing legislations through his term. Now, we're not expecting a material shift in government policies, but the fiscal policy under DPK could turn slightly less conservative at margin.
Just turning to the geopolitics of this, the PPP has built up a stronger relationship with the US around chip exports. Is that something that will continue under both parties?
Yeah, I think the PPP is generally seen as a slightly a right-wing party, so a little more business-friendly. And diplomatically, they do share more friendly relations with the US, which is South Korea is one of the largest export market as well. So that continuing collaboration on high-tech production, investments in US semiconductor ecosystem and in electronic vehicle system, that is something that we would expect to continue in a PPP-led assembly.
And just looking at interest rates and currencies, any divergence in where they could go depending on the election outcome?
I think the Bank of Korea will continue to focus on optimizing the growth inflation outcomes for the economy. Currently, they are seeing sticky pressures on inflation, and that will continue to remain the focus. So, when the Fed moves and what that might mean for the currency is something that the BOK will look for, and we expect BOK's first rate cut to come through in third quarter of this year.
Bansi Madhavani there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, April the 10th. Catch you tomorrow with market reaction to those US CPI numbers and the Reserve Bank of New Zealand's decision. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.